It's Monday with Maya here on Ari Technology. I'm Maya Paveza, also known as Maya Ari Guru on Twitter and other places. So we're doing the how, what, why of why people buy or sell real estate, because we're talking about educating our clients and making sure they're comfortable with the process, because setting the expectations and making sure they understand the process makes it a lot smoother for us, smoother for them, less traumatic, and you know what? You get more to closing. So time is money, efficiency is key. So we talked about the how and we talked about the what very briefly, and talking about what kind of goes in conjunction with the how. So it's sort of not really how, what, why, but more how and what, and then why. Because you want to ask the question, why are they buying real estate? What are their goals and things to help determine how you focus the search and what you are doing to inform them and teach them. Because really our job is more consulting than it is sales. So the what. What are they purchasing real estate with? Whether they're a cash buyer or whether they're using a mortgage, private, doing a federally backed loan, a jumbo, it doesn't really matter. We need to help the clients to understand the different products that are out there. Now, I'm not a mortgage professional, and I don't know as much as I probably should about mortgages, because I've always stayed out of my clients' financial side of things. I would put them in front of the broker or lender or loan officer and let them talk with them, because I don't need to know what their credit score is. It's not my business, their decisions. But a couple of things that I think are always important to tell your clients, especially after the cycle we just came through where so many properties lost value, short-term value. People have to remember, long-term real estate always gains value. And real estate, people don't necessarily know, doesn't mean a house, it's the land. Real estate is defined as the land because it's unique. You can't duplicate that piece of land anywhere else. The house and anything on the land, aka the real estate, are called the improvements. So explaining some of these things so people understand that buying real estate isn't buying a house. Yes, there are some places, especially here in Delaware, we've got a few that are land lease areas. So technically you're leasing the land and you're buying the improvement. But semantics, we know, but the consumer doesn't really impact them, but it's still, nice to make sure we clarify these things. So that's what helps determine value too, is obviously you can't duplicate a piece of real estate. It exists, it's unique, technically to the core of the earth and to the atmosphere, but not everywhere. In parts of Pennsylvania, people don't own the underground portions because they're mineral rights, and I think other parts of the country as well, with gas rights maybe in Texas and things like that, natural gas. Anyway, so the what. I like to remind clients that because we've had this downturn and so many people put money into their houses, the bank doesn't take a loss, you take the loss. So if you bought a $700,000 house and the value declined to $400,000 and you had $300,000 cash into that, guess what? Bank's not splitting that loss with you. They are going to want their $400,000 and you're going to be SOL on the other $300,000. So I always like to tell my clients, first of all, you don't want to be house poor. You want to be comfortable with your payment. Just because you're approved to $750,000 or $1 million doesn't mean that that's where you want to be. Maybe you're more comfortable at $250,000. Maybe you're more comfortable at $300,000. Coming out of an apartment situation or a rental situation, in most parts of the country, rents might be lower than the cost to purchase, and in some parts of the country, like here, rents are actually higher than the cost to purchase, which is kind of an interesting anomaly. But that being said, buy investment properties in Delaware. So I always tell my clients, if you can keep your cash in the bank or invest it in other ways, that's a much smarter thing to do. Leverage, your mortgage as much as you can. It's the cheapest way to borrow your own money. You can't get interest rates like that on any other kind of loan. So why would you put $100,000 into a house that you're buying for $250,000? If you can afford the payments and do an FHA or put the bare minimum down to get the loan product that you want, I always recommend that clients review those options. Because, you know what? If you need the cash, it's harder to get an equity line. We don't know if they'll be there. and you may not be able to do a refi for the same kind of rates you have. So borrow your own money by borrowing more on your mortgage within your budget, of course. So that's one of the things. So making sure your clients understand different things like that, what an FHA loan is, what a VA loan is, who's eligible, investors, understanding that some companies or banks will allow you to do a refi within a few years. So maybe you start out with an FHA product with a 3.5% down. They do a lot of improvements. Maybe they use a 203K, and then they flip it around and get a conventional mortgage with equity, and they can drop the mortgage insurance. Now remember, FHA mortgage insurance is the MIP, mortgage insurance pool or premium, some people call it, versus the private mortgage insurance or whatever with the PMI with their regular loans. Now what's also interesting is that I've learned this recently from a number of brokers, is that they can actually shop the mortgage insurance rates. And when I've worked with banks and directly to financial institutions, wasn't aware of that. And so I've become a little bit more of a believer in a mortgage broker over a bank. But I always give my clients a list of the top 3 lenders that my clients have been working with. And sometimes they're people that maybe they brought with them, but the experiences were so good. And I always talk to my clients about that, because it's important to have a lender who will communicate. It doesn't matter what the price point is. If they're not going to communicate with them at $150,000, they're not going to communicate with them at $1 million, as far as I'm concerned. You get one shot to prove yourself. And I'm working with this great local lender right now. I have the listing, and she's working with the buyers. Her name is Carol White Schilling at Fairway Mortgage, and she is sending me these great emails updating me on the loan status and the process and what's going on. And it's just such a great way to keep my client up to date and know that things are progressing very well, and it gives you a much better sense of things as a listing agent. So I really appreciate that kind of communication. I've worked with loan officers in the past when I've been a listing agent who won't communicate with us, and that's a big problem, because we need to tell our clients exactly what's going on. This is Juliet. So talking to your clients about what they're going to use to purchase real estate is important, almost as important as the how, because they need to be pre-approved. It's not easy to borrow money these days, and it's not like it was 10 years ago. So making sure that they understand that is essential, because if you don't have a qualified buyer, you're wasting your time, and they're wasting their time too. If they can't buy for 6 months because of whatever credit reasons, put them in credit counseling, help them, keep in touch with them. But running around and looking at houses isn't going to help them. It's going to build their frustration level, and it's also going to shut out some of your clients who might need your attention at that time. So again, it's setting the expectations and making sure your clients understand that. So what are they purchasing with? That's part of that first conversation you want to have, and make sure that you have some good lenders that you can refer them to talk to. Now, these days you don't necessarily get multiple pre-approvals, because they're not just running a credit check, they're running the automated, or they're practically doing a full-on approval, which is even better. Now, I know in my local area that there are some loan officers with financial institutions and some brokers that when I get a letter from them, they're going to closing and there's not going to be a problem, because the reputation is so strong. So, it's not that you don't want to give your clients choices, but you often want to recommend that they try some of the strong people in the marketplace, because that also helps sometimes in getting an offer accepted. Then another consideration for them too is the products that are available. Some lenders and some banks or financial institutions have different products than others, and they can shop these things around. They can look at rates and buy a rate down. Also talking to them about seller's assistance, and in my market, at least Wilmington, Delaware, and sort of southeastern Pennsylvania, it's pretty common, and I know I tell my listing clients to be prepared to offer a 3% seller's assist for closing. And it's not that somebody necessarily needs it, but a lot of people seem to be asking for it. And what that essentially means is when the market's competitive and a property is priced right, they're weakening their ability to negotiate. Yes, they're borrowing their own money, and money is cheap to borrow when it comes to real estate right now. So if they want the 3%, that's one thing. If they need the 3%, that's another thing. But educating them, showing them the market conditions, using tools like RPR. I just did this with a client yesterday. I pulled some market reports and market activity reports on RPR, and then I pulled a valuation on a property they were looking at because they wanted to make a fairly low offer. And with that, and after they looked at the market activity and neighborhood reports, they actually increased their buying price point by about 30% because they were able to see, based on some of the census demographics and information provided in the RPR neighborhood reports, like 2-year college degree, 4-year degree, graduate degree, income, age ranges of people, all this sort of information that's aggregated into RPR, they were able to determine that they were targeting an area that they wanted more. So they looked at, probably, I think I sent 12 zip codes, and of that they selected a different area to target, and with that came a higher price point. So giving the clients the information can help them make better decisions too, and RPR is an amazing tool if you haven't used it. So the what, understanding what you're purchasing it, and coming back again a little bit to talk about the how, and then even a little bit of the why as you move into giving them these market reports and things from RPR, which every Realtor member has access to if your MLS is participating. So that's a little bit of the what. Next week, for Mondays with Maya, we will talk about the why. So remember, set your client expectations, communicate openly, give them choices, and make sure that you're serving their needs. Sometimes helping your client realize it's not the right time to buy or sell real estate is going to get you referrals, because if they go do something they're not ready for, who do you think they're going to blame? Us. Always. We know that. All right. It's RA Technology. I am Maya Paveza. Thanks, and have a great day.